G'day guys, welcome back to the Devon Too Good Investing channel. In this video today, I'm going to be giving you guys a Tattooed Chef stock valuation where we're going to value the business and we're going to go step by step on how I do this. So before we get into it guys, make sure you like this video and subscribe to the channel. So essentially how I'm going to do this valuation is I'm going to take Tattooed Chef's long-term guidance. So this is for 2025. They're expecting 600 million plus in annual sales, 20 to 25% gross margins, and 30 frozen SKUs at each retail location. So I'm going to take this 600 mil revenue number and we're going to grow out the revenue to 600 million by the end of 2025. And by doing so, that implies a growth rate of 28.6% per year revenue growth. At the moment, the company is trading at a market cap of $568 million. So essentially we're expecting revenue to grow 28.6%. That's what the management is guiding going out into the end of 2025. This is a fairly high growth rate. However, for this valuation, whether you believe it or not, that's up to you. But for this valuation, that is what we're going to use. We're going to use the management's guidance. And the next step was working out what is a fair margin for this business. What margins can we expect Tattooed Chef to produce in the year 2025? And the way I did this was I went and had a look at the gross margins for some more legacy food companies essentially. So we got Tyson Foods, we got JBS, General Mills, and Conagra. And remember, Tattooed Chef are guiding for 2025 20 to 25% gross margins. So Tyson Foods, they had about a 16% gross margin in the previous year. JBS, 21%. General Mills, 35%. Conagra, just under 29%. That gives us an average gross margin between these companies of 25.4%. And then obviously we want to know the operating margin as well. We want to see what revenue ends up being operating income. So for Tyson Foods, it's about 12%. For JBS, it's about 9%. For General Mills, it's about 19%. And for Conagra, it's about 18%. If we average that out, we get 14.5%. So that's what we get there. And then for net margins, so this is pretty much net income, or what goes down to net income from revenue. And I'm not going to go through all of these, but we get an average of 9.5%. And then also, I wanted to know the average 5-year PE ratio, because we're going to want to know what kind of PE ratios these sort of food companies demand. And out of these four, the average is a 16.9 over the last 5 years. So I also wanted to have a look at the 5-year revenue growth rate for these companies. So essentially, we want to know what kind of growth versus what kind of PE do we pay for food companies. Well, Tyson Foods, they've grown only 5%. JBS have actually shrunk 2% per year over the last 5 years. General Mills 1.8, Conagra 5.2, and this gives us an average of about 3%. So knowing that the average food company here is only growing at 3% and they're trading at about a multiple of 17 over the last 5 years, we can definitely expect Tattooed Chef to trade at a multiple much higher than 17. So I've taken the midpoint of their 2025 estimated gross margins here for Tattooed Chef, and I've made a reasonable assumption of an operating profit, and I've used 10% here. So if we look at the average for these food companies is 14.5. I don't think Tattooed Chef's operating profit margin will be quite the same as these companies, as they're still going to be in growth mode at this stage and they'll still have some operational efficiencies to improve. In terms of net income margin, I've selected 7%, which is below the average of 9.5. It's for the same reasons. They'll still be growing fast, probably, and they're not going to have the same efficiency as these larger companies with higher revenues. Obviously, as revenues scale, you get those economies of scale, which improves margins. But using these factors here, we get a net income in 2025 of 42 million based off these assumptions. So essentially, I think Tattooed Chef can probably trade between a 20 and a 30 multiple going out into 2025. Some may say it's too bullish, some may say it's too bearish, but if the company does achieve these numbers, honestly, they could easily trade above 30, considering that these other companies that are growing at 3% on average are trading at a 17. But regardless, these are the numbers I've selected. So for a market cap, we're estimating for a bear case, we're looking at 841 million. For the base case, 1 billion, just over 1 billion there. And then for the bull case, 1.26 billion. So that implies a CAGR going out into the end of 2025 for the bear case of 12%, the base case 19%, and the bull case 26%. So based off these values, you can see what we're going to achieve there. Let's say you think the net margin will be lower. Let's say you think it's only going to be 5%. Well, if we come down here, these are your estimated returns based off the different PE ratios. Let's say you think it's actually going to be 7, but it might trade at, let's say, a 40 multiple. You get a you get a 36% per year CAGR. So, it's really, you got to do your own research and be confident with your own inputs. And some of the other flaws of this model, it's always good to go to the flaws. It doesn't account for any share dilution, and there's a possibility Tattooed Chef might have to raise cash, considering that they are losing money at the moment. But the company have guided that they will be EBITDA positive late 2023. So I think it's going to be tight. I think they're pretty much going to burn through all their cash by the time we get there. But they might do it just in time. I'm really not sure. We'll just have to wait and see. Right at the moment, the company has enough capacity to reach this 600 million in revenue guidance. So they're not going to need to do any major sort of acquisitions anytime soon. So we'll just see. But it's a risk with the model. Also, these margins are also a risk with the model. You got to be confident in these margins. And at the end of the day, Tattooed Chef's management team, they have to execute. They're going to have to grow this business 28.6% per year going out to 2025 for this model to be valid. And yeah, it's very well possible they might, but we're going to have to see them really execute with their branded revenue growth. And then we're also going to have to see them execute on the margin side of things and increasing the efficiency of the business. They do have a good plan though in terms of increasing efficiencies. So essentially their new facilities, they're only making private label at the moment, but as they transfer the private label to the branded products, those products are higher margins. So the margin is going to increase as they transfer from, the mix transfers from private label to more branded products. They're also investing $20 million into automation of their factories. That's going to increase capacity. That's going to decrease labor costs. That's going to prop up gross margin. And then also economies of scale. As they grow that revenue, their fixed costs, their overhead costs are going to stay the same, but their variable costs, essentially their revenue is going to grow faster than their expenses. That's pretty much what I'm trying to say there. As they start to reach capacity in their different manufacturing facilities. And obviously the PE ratio, look, this is really hard to tell. You never really know what it's going to trade at, but I don't think it's crazy considering the averages that we got here between the 4 food companies, and as well as the growth rates. We're going to be growing much faster. I wouldn't be surprised if we're still growing double digits for revenue, well past 2025. So guys, this is my valuation of Tattooed Chef. It is a difficult company to value as they aren't profitable yet, and we're relying on management's execution for revenue growth and margin expansion. So if that doesn't come, this model means nothing. If it does come, well, you can see the returns here. We're looking at some fairly attractive returns, particularly in the base and the bull case. So you guys know the risks. You have to do your own research, but and also one more thing. Tattooed Chef are coming out with their annual general meeting, so that's going to be another good meeting to sort of look at their expectations, see how they're performing, and seeing what they've got to say. But guys, I hope you enjoyed this video. Make sure you give it a like and subscribe if you're still watching it to this point. But guys, thanks for watching, and see you in the next one.